What is going on, everyone? This is Andrew O'Connell with Pristine Capital. I am also the Director of Research at LeDuc Trading, coming at you with yet another market recap video. It is December 10th, 2020. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to be talking about the price action, the indices, volatility. We'll go under the hood and check out the sectors and style factors, some trades that I took, and I do believe I put on some pretty interesting trades today. And then we'll wrap up some options order flow. But before we jump in, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk management. And last but not least, do not YOLO your entire account into one of my trades. So that being said, let's jump right into it. So what do we got going on today? Hope everyone had a great trading day. Let's check out the ES. So let's see, this is CCJ. This is one that I traded today, but let's back that up. So today for the indices, we had the S&P 500 down 0.03%. We had the Qs, which were dreadful yesterday, up 0.4%. We had IWM, the small caps, up 0.97%. And last and least, the Dow Jones down 0.11%. Always lagging the IWM. Had one good day yesterday, but that was about it. Let's take a look at our action in the ES. So as you can see, this is the weekly chart. Let's zoom into the daily, and then we'll go to the hourly. So you can see I drew in some more trend lines. I try to mark off every single downtrend with trend lines as soon as I think one might be starting. And that way, right now this just looks like a little dip. We are still below the 5-day exponential moving average, but we are still above the entire monthly value area. So, if you are a bull on this market, you could see this as just, a little buyable dip, like a nice retest of the top of value, and then we're going to move on from here. But I marked off these trend lines just in case we start, trickling down into that monthly value area. But as of right now, I came into today's session with hedges on, and I ended up pulling those hedges off pretty quickly because the price action looked pretty benign. Let's jump into the hourly chart. Okay. So these are the little trend lines I drew in. But pretty much yesterday what I was talking about was this is the weekly value area. And if a downtrend is going to start, this would be one of the first things to happen where, we would break through that weekly value area. So yesterday we sliced through the weekly point of control, no problem. And we bounced off this, trend line I drew in right here. And you can see we've been sort of like waffling around this weekly point of control. And what happened this morning, this is, the 7 o'clock candle and the 8 o'clock candle. You can see that coming into the trading day, we looked pretty soft. And I was like, okay, I'm glad I put that hedge on because this looks like, it could get ugly and we could hit this 36.39 level on the ES. But then if you take a look at what happened at 9 o'clock, we ended up getting buyers coming in to buy the dip, on very high volume. So immediately once I saw that candle start forming, I said I'm taking my hedge off. I had the 367 strike puts, and I took them off for a 3% loss. And I'm pretty proud of that, to be honest. Because, in case this thing had gotten silly to the downside and really fallen apart, I would have been hedged. And, I ended up taking a loss of 3%, on an options contract to get that benefit. As you can see, we really just waffled around the entire day. Keep in mind, we do have options expiration coming up next week. And as you guys know, I always say, options expiration week can just be a week of chop. There's a lot of gamma pinning going on in the market where all these options are expiring and there's not really all that much movement going on. So as of right now, we did close below the weekly point of control. But the volatility, looked pretty benign. There was no real fast pace to the downside. We're really just moving sideways. So let's take a look at IWM. Actually, we'll go to the Qs first. The Qs were the ones yesterday in the momentum style factor that really fell out of bed and just looked like they could slip into the abyss. And it was nice to see that there was a bit of recovery in those areas today. Let's go to the daily chart. Yeah, so Qs with a very nice candle here. So this is pretty much a perfect test of the 20-day simple moving average. And we ended up closing right under the 5-day exponential moving average. So this one, again, looks pretty benign. At the moment, just looks like a retest of the top of value. But as always, we will have to see what the river brings. Well, this is the kind of candle where, like, I'm not going to buy puts, on this kind of candle. But that's just me. And IWM, staying strong, almost back at the highs from yesterday. So you can see these small caps have a lot of price momentum. They really just, check back to the 5-day EMA. They didn't even make it to the monthly value area. So this looks very bullish. Dow Jones. Yeah, still just waffling around sideways. This one does not really have anything in terms of momentum. This one is, just pretty much doing nothing. But let's take a look at the VIX. Because, as I alluded to earlier with my SPX hedge, the VIX put in, a pretty benign looking candle as well. You can see we've been stuck in a range on the VIX for the past, 2 weeks or so. And it looks like we're sort of putting in a base here. And you can see we ended up closing. Let's see, did we close green on the day for the VIX? Yeah, it looks like we closed up 1.12%, but we are well off the highs. So this is something where I want to be cognizant of what the VIX is doing and I want to keep an eye on it. But this right here, if we had trended up and closed on the highs, that would be, pretty intense. But you can see we closed, nowhere near the highs. So I want to be vigilant. I want to make sure I'm managing my risk here. But, I'm not going to go nuclear short the market or anything like that. And if we look at VVIX, yeah, VVIX put in a doji candle after a, pretty big green candle yesterday. Same thing. I'm going to keep watching this, but this is more of a yellow flag. And let's take a look at these sectors and style factors. Let's check this out. So for our sectors, oh my lord, the ARC Genomics Fund plus 6.19%. Oh my gosh. The ARC Innovation plus 4.35%. Then we had energy up 3.07%. So those are all of our leaders in terms of, sector and style factor momentum. In terms of the laggards, we had the medical devices up 0.72%, XLU, the utilities, down 0.51%, and the gold miners, which can never catch a bid in this environment, down 0.45%. So let's take a look at that ARC-G candle. This one is just blowing my mind. Yeah, look at that. So that is like, in terms of an entry, me personally, I never want to enter on like a parabolic move, but this is pretty nice. We are having some sideways digestion, and you can see this thing, it's pointing higher right now. Like it completely, so there's pretty much a bearish engulfing candle that engulfed the prior two candles, and then you just had a crazy bullish engulfing candle that engulfed the prior bearish engulfing candle. So yeah, this one, just very strong. Let's see. Oh my gosh, my toss wants to just completely give up on me right now. Okay, there we go. Energy was another nice day. This was one that Samantha was all over in the room today. Didn't close on the highs, but yeah, this one, very bullish. These energy stocks do have momentum. Now let's take a look at these style factors. So yeah, like in conclusion, looking at these sectors, yesterday they kind of looked bloody. A lot of the high momentum areas got taken to the woodshed, and you can see today, for the most part, they recouped all of their losses. In terms of style factors, high beta up 1.03%. Now let's see, the next leader was momentum. So basically all the stuff that everyone is now long went up a lot today. And then towards the bottom of the list, we have growth up 0.31%. We have international momentum up 0.56%. And we have Minvol down 0.39%. So this to me looks like a pretty bullish day because, you can see high div, low vol was an underperformer and Minvol was an underperformer as well. So, it's very tough to look at this other than a slight pickup in volatility and, see it as, a bearish day or anything like that. Now for some trades and things that are on my watch list. Now, a lot of things were working today, actually. Like in my video yesterday, you could tell I was kind of frustrated at the way that I traded, but today, everything was pretty smooth. Let's take a look. Twitter was one that I found to be super interesting. Twitter, there was some news. Check this out right here. So you can see here, Snap launches a native Twitter integration. Oh my lord, this to me is huge news. So Snapchat now lets you share tweets directly, and Twitter plans similar Instagram integration. So like for instance, for me, I'm a big Twitter head, but I have no involvement with, Snapchat or Instagram. I've never even used them. I know Snapchat is, a slightly younger demographic. Instagram, not too sure. But now that these things are being integrated, Twitter with Insta and Snapchat, you never know. I might find myself participating more on Instagram and more on Snapchat. Conversely, people that are on Snapchat or Instagram that don't use Twitter, they might find, hey, this Twitter thing is pretty cool. I'm going to start using that. So in terms of all the digital advertising that is going on, all those ad revenues, there's going to be a lot of cross-pollination, which in my opinion is good for Twitter, for all parties involved. And the thing about Twitter, I did a pretty deep dive on them when I was doing my research on Digital Turbine, ticker symbol apps. And Twitter is the biggest business in terms of revenue, in that space, bigger than Instagram, bigger than Snapchat, bigger than Digital Turbine, and the margin profile is pretty good too, where they do have some good profitability. But the reason why they are at such a low valuation is because their revenue growth is a bit slower than the rest of the pack. So something like this, where it could lead to an acceleration in Twitter revenue growth, to me, I am all over that. So I ended up purchasing some February 50 strike calls for Twitter. I bought pretty much towards the high of the day, but I did not care whatsoever. This is one where it had a big move, and it might consolidate sideways for a while, but those 50 strike calls for February, that is a risk, that I want to be a part of. So yeah, this one looks really good, and if you take a look at just the size of this candle versus everything over the past month or two, this is just, a big bullish candle. So basically my thesis with the trade is this isn't just a one-day pop. This could lead to Twitter stock entering more of an uptrend. So that's really the idea there. We'll see what happens with it. And Jumia was another one that I have been trading. I entered a long position, this one, I think on one of these candles down here. But yeah, this one had a pretty nice outside day, plus 12.97%. This one is more of a long-term idea for me, and something I just want to continue to hold for a long time. Baidu was another one. I entered Baidu yesterday, talked about that in my video, and you can see we got some nice follow-through in Baidu. So yeah, this is a pretty nice, follow-through to this candle right here. The magic in Baidu is sort of, messed up a little bit by the volatility in the markets yesterday, but it was nice to see, a nice bullish candle yesterday. We have some resistance at the 162 level, so I will be watching that. But again, this one is such a beautiful, trend reversal pattern that is forming. So if you take a look, we are on the verge of breaking out of the yearly value area. So I want to stick with Baidu as long as I possibly can. GoodRx is another one I entered. I bought some April calls in GoodRx. And I believe I picked up, I think I bought the 40 strike. And really this one, you can tell it's super beaten down. There was the news that Amazon was entering pharmacy and this thing just crashed. But yeah, this one in terms of if you're expecting any sort of volatility or anything like that, this is certainly a name I don't think everyone is loaded up on. And you can see we're hovering above that monthly point of control. And then one of my favorite analysts in the healthcare space is going to be presenting on it tomorrow, his bullish view on the stock. So this is one where, I want to play this stock, for a bit of an intermediate term play and see if the stock can get going on that presentation. So we'll see what happens. I bought these for April. And then let's take a look. The other trade that I'm pretty stoked about is CCJ. And CCJ, you can see here, or is it even in FinViz? Okay. Yeah, look at this base that CCJ has been in. So check this out. Yes, this has been consolidating sideways for quite some time. You look at that, and it's poking out of that consolidation. And CCJ, this is actually an idea from my buddy Rick. Shout out to Rick. Cameco Corporation produces and sells uranium. The company operates in two segments, uranium and fuel services. The uranium segment is involved in the exploration for mining and milling, as well as purchase and sale of uranium concentrate. He has a pretty bullish thesis on uranium. And, I'm more of a technical trader. So you can see, I zoomed out to the weekly chart, and he was explaining to me, uranium has been in about a 10-year bear market, and it looks like it is starting to reverse. So if you look, this company CCJ was at $52 back in, 08, and you can see this thing has been on a death march ever since. But this to me looks very interesting. So you can see we bottomed out, in the coronavirus crash, and we have been moving around within the yearly value area. We poked above a few times, but you can see this is looking like a pretty firm breakout above the yearly value area. And we do have a bunch of upside targets here. So for this one, I bought the January 2022. I bought some 10 strike calls and some 12 strike calls, I believe. So for this one, longer term play, I have about a year's worth of time plus, and just looks like a pretty compelling, setup in terms of a trend reversal. So that about does it for my trades and trade ideas for today. Let's go through some options order flow before we wrap up. And here we are. Yeah, this is some of the Twitter flow that was coming in today. That was originally how I spotted this one. I was just watching the options flow, and I was like, why is there so much flow coming in for Twitter today? And once again, I am going to be posting my affiliate link in the description to this video for Cheddarflow. That being said, I do enjoy walking through this content with you guys every day for free. So do not feel obligated to go out and sign up for Cheddarflow. But it is one of my favorite platforms, so you probably should. Let's take a look. So in terms of our large orders, QS, oh my lord, QS has been so bullish. This one, whenever I think it's, tapped out, it just continues to run. So it looks like it's finally consolidating a little bit. Look at these gaps. There's going to be some bag holders in here, I can tell. Or at least some weak hands that get shaken out. Like, come on. Look at how big this gap is. But, you know, that's just my opinion. And the market does not care what I think. Trust me. Let's see. CrowdStrike. We have an order for $2.6 million for 2023. CrowdStrike is an interesting one. I do like to trade this one. Wow, nice candle on CrowdStrike. This one has been on a really nice run since it reported earnings. And yeah, this one continued today. Very nice. Tesla, of course, those savage call buyers always coming in. Expedia. We have some orders for June of 2021 and November of 2021. This is pretty unusual. I never see Expedia come up. Let's see what it did today. Up 1.27%. Yeah, this one's been consolidating for a while. Oh, let me see. I'm gonna see if we zoom out. So this is the weekly chart. Yeah, and we are above the yearly point of control, which would target the 138 area. Those look pretty interesting. I see it peaked out around 161. So yeah, pretty interesting play. Yeah, and that is very unusual. So I'll be watching Expedia tomorrow for sure. We got some UVXY calls for June. Somebody betting on volatility. That's a change. And we got some Wells Fargo plug, which I have a butterfly on expiring next Friday. We have some 26 strike calls. So yeah, this is some pretty unique activity. It's a lot different than what I usually see, which is pretty cool. Looks like a Fastly order. This is super short term. Let's see Fastly and then we'll wrap up. Okay, yeah, Fastly is doing stuff. This is probably another one that I want to watch. There were rumors of a takeover for Fastly. Who knows if it's going to happen, but this looks like one of those where, it continues to march higher. We'll have to see. That about does it for this market recap video. Once again, hope you all had a great trading day, and I will see you all tomorrow night.